that are commodity-like. And what do I mean by that? So take gold, right? An ounce of gold is always an ounce of gold. It doesn't change, it doesn't grow, it doesn't get more efficient. And so for 5,000 years, that single ounce, if you gave it to somebody, they would give you essentially a fine person's suit, literally from Cleopatra's time to a suit of armor to Savile Row today. And so things that hold value, Bitcoin being digital gold, right? It has all the qualities of gold, but it's better in that it's more divisible and more portable. And so I think for the next 5,000 years, it becomes the digital version of that as we move into the digital age. And so when I look at that market and all markets related to commodity-like assets in an expanding monetary supply scenario where you got China printing and the US talking about printing, Europe printing like crazy, those assets are going to rise. And gold's had a great year. In fact, most people have no idea. Gold has outperformed stocks for the last 25 years, compounded. Like, no, it's not true. Well, it's because, again, the gold didn't change. What changed is the number of dollars you need to buy the ounce of gold. So here's a fun fact, less fun if you are actually a stock investor. Equities, people say, they're all-time highs. Price in dollars, they're all-time highs. But the dollar buys less. I saw someone this morning tweeted, 2 bagels and a cup of coffee for $32. What the absolute hell? I mean, and so inflation is theft, literally. And from 1776 to 1913, there was no inflation. There was no devaluation of the currency. There was no central bank. So from the founding of the Republic to 1913, the dollar did move a little bit in terms of value around 2 wars and a depression caused by Andrew Jackson trying to disrupt banking and created something called the free banking era, where everybody could create their own money. Like Texas had their own money, and companies had their own money, and it was a shit show. But so you asked me what I think about the markets. Well, what I think about markets is in an environment where currencies are being devalued because countries are too far in debt, and you've seen all the nonsense going on with Elon tweeting about the silly budget, the big beautiful bill. I mean, here's a guy who ran, not Elon, but Trump. Here's a guy who ran, drain the swamp, get rid of all the graft and corruption. And then he passes the big beautiful, or he promotes the big beautiful bill with a $2.5 trillion deficit. Are you fucking kidding? Sorry. Are you kidding me? I mean, he's the biggest. You want to protect yourself by owning assets like Bitcoin or gold or real estate or fine art or jewelry or whatever it is that is scarce. So anything scarce, I want to own. Anything you can't print, I want to own. Now, that doesn't mean all equities are bad. Overpriced equities are bad. Like, people love CoreWeave, right? But I love it. I know you understand you love it because it's going up. Number go up, everybody loves it. I loved your intro. People want generational wealth by next Monday. I love that. And by next week. And so that's not the way it works. And I know it's a pun. But here's the funny thing, right? CoreWeave has basically 2 customers. And there's some accounting shenanigans, and the valuation is at levels. Stuff like that makes no sense to me. But there are companies all around the world selling, below book value, below par, decent multiples. And so I do think there's some interesting opportunities. Bonds, less interesting generally because of what they're doing to currencies in terms of devaluation. Japanese government bonds have lost half their value in the last 5 years. Shocking. But there was no choice, right? They took interest rates to 0. And as soon as they left 0, which, Ueda-san came in and replaced Kuroda-san, the head of the central bank of Japan. And he's like, well, I'm an academic, and I think we need to get rid of yield curve control. Right? Okay, but if you do that, all your insurance companies are bankrupt. Most of your banks are going to be bankrupt. And you, the Bank of Japan, is going to have a problem because you own 74% of all the bonds. Look, I don't care. Theoretically, this will all work out. Like, well, practically, it's not gonna. So there's those types of issues all around the world. And one thing I'm very sure of, my wife says I'm frequently wrong, never in doubt. Like, well, occasionally wrong. I am never in doubt. I mean, I am prone to hyperbole, and so people say, how can you say things like that? Like, what do you mean? He says, well, you say things so forcefully. Well, what's wrong with that? Well, people will believe you. Well, that's the whole idea. He says, well, what if you're wrong? But then I changed my mind. I mean, Lord,
we're allowed to be wrong. We're allowed to be wrong.
It's okay to be wrong. Although, before Will Smith was not cool to quote, he gave a talk once at a conference and it was awesome. And one of the lines that I loved, he said, fail fast, but fail forward. Right? Just keep moving forward and get the failures out. And, Michael Steinhardt, very famous hedge fund manager, said it, said, make all your mistakes when you're young. When you don't have a lot to lose, just keep making the mistakes because then you learn. Because the thing about mistakes, again, this has nothing to do with the question you asked me, but it does have to do with investing, right? Investing, two things are really, really important. One is what Coach Smith, the legendary coach here at North Carolina, said, which is when you make a mistake, which you're going to do, right? Ralph, recognize it, admit it. Oh, that's the hard part. Learn from it. That's actually the easy part. Forget it. Hardest part. And the reason the forgetting is so important is what that other coach down the road, Coach K, said, is what separates a good player from a great player, or a good investor from a great investor, because he wanted to take the next shot because he was sure he was going to make it. Now, sometimes you don't. And so you'll want to have that ability to try new things, to keep pushing forward. But when you make a mistake, admit it. And this is a big thing on investing, is everyone thinks, well, you should double down, right? When something goes against you, I'm just going to buy more. Well, yes and no. I mean, if you've done the work and you know the value of the asset and it gets cheaper, okay, you could argue that does make sense. However, the market's saying something that you missed, because the market's never wrong. So, well, I'm right, the market's wrong. You're just wrong. So there's a famous picture of Paul Tudor Jones, famous hedge fund guy, in his dorm room at UVA. And it says, losers average losers. But the opposite of this is winners press winners. And this is something that Julian Robertson, who was my mentor, was so great at, is when something's going your way, you actually want to do more. And no, Harry Markowitz, and you studied under Dr. Markowitz, and he says you should rebalance. Yes, you should. And on a periodic basis, you should rebalance. But rebalancing is more about your stay rich money. Remember, and I think we talked about this last time, is you got your liquidity bucket that funds your lifestyle. And it's got a hole in the bottom. And then you got your get rich bucket, which is to do all the fun stuff, generational wealth by next week. The stay rich bucket, which again, most young people don't have yet, right? We're still in the get rich. I still consider myself young. I don't look young when I see myself, but I feel young. And the key is the get rich stuff, you want to press your winners. And you want to have that ability to really, so many people are invested in Bitcoin, right? And either they have Coinbase account, and, oh, it's not really Bitcoin. Sure it is. My dad has a Coinbase account. He loves it. He's never going to have a ledger. He's never going to hold his own keys. I'm not going to hold his own keys.
He shouldn't, though, right?
He doesn't. He's 87 years old. He should not. No. Now, if you want to hold your own keys, have your own, that is the future. Yes, that's beautiful. Now we have to fix some of the UI UX problems, but there's different things that make sense for having Bitcoin. Beyond that, people say, well, maybe I own MicroStrategy or Strategy now, Strategy B, which I think is eventually going to be called Strategy Bank. Although Saylor denied it in Vegas last week. He's like, no, we're never going to be called a bank, which is true because he doesn't want to be a bank. He wants to be a financial services company, but he still thinks he's going to call himself Strategy Bank. But so Strategy, you're like, well, why is that so good? People say, well, if they own Bitcoin, and that's really all they do because they flush the other business, then why should it trade above NAV? And the thing is, if you can issue debt with no recourse and no interest to buy more Bitcoin, then your Bitcoin per share goes up. So you should trade at a higher MNAV. Mm-hmm. But then here's the really cool thing. Well, now if I'm trading at a higher MNAV, I can issue new shares at a premium, buy Bitcoin with more money than the NAV. So I'm, again, he calls it arbitrage, and it is an arbitrage. It's basically free money. And so you should trade at a premium. Now, how big that premium should be, that's a question. And so, long story short, you got Strategy, which is a levered play on Bitcoin. And in a prudent way. Like people lever Bitcoin 30, 40, 50, at one point in the last cycle, 80 times. You're an idiot, right? I shouldn't out a family member. I won't out him, but I have a family member. He called me up and said, they stole my Bitcoin. Like, what are you talking about? So, well, it was a Bitfinex. I'm like, stop. You're a freaking idiot. You put 80 times leverage on an 80 vol asset and you got a margin call and you didn't pay it and they took your Bitcoin. If I need to pay my mortgage at the end of the month, I can't have a drawdown before the end of the month, right? So if I need to buy something, pay for kids' college or whatever it is, there's a portion of your wealth that needs to be stable, secure, high quality, T-bills, money markets, stable coins. Great. But then in a portfolio, there's different things that you need. Maybe you want some income to replenish the hole in the bottom of the spending bucket. Now, I will argue personally that there's no difference between capital gains and income. In fact, I like capital gains better than income because you're taxed at a lower rate. So I'd rather take capital gains and pay 20% than pay ordinary income on income. But that's just me. But some people feel more comfortable with income. So if you think about Bitcoin is a savings tool. It's like gold. It's like literally the best savings technology that we have. And so if you're, whatever age, let's say you're older like me, you should have X percent. What's that percent? To me, it's 5 to 10% at that core of your savings. As you get younger, I can argue that number gets bigger and bigger. Now, there are those who say, no, it should be 100%. It's Bitcoin on steroids because it's got leverage. So I'm going to get the return of Bitcoin plus. Why wouldn't I do that? I probably would. To me, that's like owning equities. Why wouldn't I do it? Because you own cash to pay your bills. You own bonds to get a little more return than cash. You own equities to get a little more return than bonds. You own private investments to get a little more return from the illiquidity premium. Like, if you think about it, if you have a long time horizon, I get on my soapbox. So people have 401k, right? So get your first job, you go in, and the HR person, it's never an investment person, it's the HR person says, we have 8 choices and you should equal weight and 4 of the choices are bonds and 4 of the choices are equities. Now you're a 25-year-old person. I believe it should actually be against the law to own bonds when you're 25. You can't touch that money. You literally can't touch that money for 60 years, or not 60, 50 years, right? And you're 75. So at the end of the day, if you can do a self-directed and put something like Bitcoin or real estate or private equity or what Peter Thiel did, private company assets, you should do that. But then beyond MicroStrategy, you could take the convertible bond, right, or the preferred of MicroStrategy, and those do generate income backed by Bitcoin. So you could do it yourself. Right? You could take a little bit of Bitcoin and sell it and pay yourself 8%. But that's a hassle. Why not let him do it for free? You don't pay a fee for it. So there are a lot of assets that you might want to own on top of your stack. Now, for those who want to say, no, I want it all outside fiat. I want it all protected by Bitcoin.